It can be tricky talking about the national housing market when different parts of the country have very different market dynamics. The fact is that nationally, home prices will finish 2024 with an increase of about 5% over the previous year. Home prices are up even though we've had historically very few home sales this year, and there are 27% more homes unsold on the market now than there were last year at this time. The important thing to know when tracking housing inventory in 2024 and 25 is that the country is bifurcated. There's one big macroeconomic trend dividing the US, which has made two separate housing markets. Inventory has built dramatically in the South, and at the same time, the number of unsold homes available in the Midwest and Northeast is still very tight. Some markets in the South, like Austin, Tampa, Phoenix, have more homes for sale now than they've had in many years. On the other hand, some markets in the North, like Chicago and Boston, have just barely more homes unsold than even during the pandemic. So the country is divided in two. If you live in the South, it can be tempting to look around and see doom in the housing market. If you live in the Northeast, you look around and say, man, home buyers still have it tough. So what's going on? Well, that one big trend dividing the country into two housing markets is migration. Not immigration, migration. Americans moving across the country. For years, Americans have been moving to the Sun Belt, from Chicago to Arizona and Texas, from New York to Florida. In the last 2 years, especially 2024, we've stopped moving. We'll cover that today when we look at the latest data for the U.S. housing market and for the first week of December 2024. By the way, we'll wrap up our year with a December webinar next week, Thursday, December 12th at 10 a.m. Pacific. In it, we'll share a ton of details on this migration trend that's dividing the country into two housing markets. We'll cover all the national data, all the local markets, and what's in store for 2025. There's a link to register for that webinar in the description below. These are limited to 1,000 attendees each week. So click now to reserve your spot. At Altos Research, every week we track every home for sale in the country, all the pricing, all the supply and demand, all the sales, all the changes in that data, and we make it available to you so that you can understand the changes in the U.S. housing market immediately as they happen. I'm Mike Simonsen. I'm the founder of Altos Research. Let's take a look at the data for the last week of November 2024. There were 707,000 single-family homes on the market heading into the Thanksgiving weekend. That's roughly 27% more homes unsold on the market than last year at this time. This is right where we've been expecting inventory to end the year. 27% is a lot of inventory growth in a single year. There are now only 18% fewer homes unsold available on the market than in November 2019, so just 18% fewer. We're almost back to the pre-pandemic levels of inventory. So we expect unsold inventory to keep rising in 2025, though not by 27% again. Depending on the macroeconomy and the whims of the mortgage markets, we could see inventory return close to those old normal levels by the end of next year. So this is the inventory chart. In this view, each line is a year. The 2024 line is a dark red line right in the middle. The gray lines at the top are the years before the pandemic. You can see how 2025, with a little more inventory build, will get close to that old normal, finally. You can also see how the natural seasonal declines of homes on the market is underway now. So next week, inventory will dip under 700,000. The Thanksgiving holiday was late this year, so we will see more of that impact in the December inventory levels. As I mentioned, the country is bifurcated into two markets, the North and the South. If you're in Dallas, for example, you'll notice that there are more homes for sale now than any time in the last decade. Inventory is way up. If you're in Chicago, you'll notice that there are 60% fewer homes for sale now than there used to be. So why is that? Well, we've been moving from Chicago to Dallas for a long time, and we're not moving right now. It's a really expensive time to move. Houses are expensive, mortgages are expensive. Even though unemployment is low, jobs are scarce. Even if you're retiring Rising insurance costs and climate disasters are making it very expensive and risky to move to some of these southern markets. So we've stopped moving. So we're not selling in Chicago and we're not buying in Dallas. When we're analyzing the supply of homes for sale in 2025, keep your eye on this bifurcation. I expect that we will see some loosening of the migration freeze next year. Not a lot, but a little. That'll help inventory in the north to grow a little bit and tighten up a little bit in the south. Like I said, we'll cover these local markets in the webinar next Thursday. There's a link in the description below to save your spot for that, to get into more details there. New listings. We counted 52,000 new listings for single-family homes this week, with another 12,000 condos newly listed for sale. That's 3% fewer than a week ago. Looking at the data here, you can see that the late Thanksgiving holiday will show up in the December numbers 1 week later than most years. The red line here is this year's curve. Compare it to the gray lines of years past. So at the right end of the chart, you can see the annual Thanksgiving dip, which we'll see in next Monday's report. And then just a couple more weeks before the Christmas week and the New Year's holiday resets inventory for the spring. After the new year, during 2025, we're watching for hopefully about 5 to 10% more sellers each week. I don't anticipate that it'll be much more than that, unless some big macro dynamics change in the meantime. 5 to 10% more sellers each week is what we're looking for. When we talk about the two markets, I anticipate that we'll see some migration resuming in 2025. It's a good time to sell your house in New York, so I anticipate more new listings in the northern states than we've seen in the past couple of years. So this bifurcated market eases a little. Right now, there are 1,000 new listings each week in the Chicago metro. That's down from 1,800 per week in the pre-pandemic times, normal times. So I expect that 1,100 to grow a little bit in 2025. Nationally, we want to see new listings climb. If we see new listings climb more than 10% each week, say in January and February, that'd be a signal of potential supply and demand imbalance that we've not yet seen in the post-pandemic era. If that supply imbalance happens, we will keep our eyes open for home price correction. It's not in the data yet, but it is always worth watching for. Home sales. There were 56,000 single-family home sales started in the week running up to Thanksgiving. It's interesting watching home sales sort of get crammed in before the holiday. That was actually an increase of almost 1% from the week prior. There were another 12,000 condo sales started. I'm showing here a 4-week average for home sales, which is 54,000. It doesn't include the big Thanksgiving dip yet, which will drop down into 30s, 30,000s, 35,000 when we report next Monday. So using the monthly average smooths out some of that weekly noise, the holidays and stuff. Citing the headlines, citing the home sales growth over last year, have finally started catching up to the data we've been reporting here for a while. So NAR reported 6.6% growth in their October pending home sales data, which mirrors what we've been seeing and reporting here for a few months. Home sales in the fourth quarter of the last 2 years have been so abysmal that I expect the headlines will continue to report growth for at least a couple more months. We can see each week here that there are more new contracts pending than we counted in either of the past 2 years. So as I say all the time, it's not a lot of home sales, but at least it's better than last year. The real question is what happens next. So mortgage rates are up near 7% and home prices have not really fallen. So the average payment that home buyers are making now is back at the record high levels for December. So affordability is back at its worst level. I expect weakness in Q1 if rates haven't eased down at all by then. At HousingWire, we expect 5% more home sales in 2025 than 24, but until we see some improvement on affordability, that forecast can be pretty tentative. Home prices. The median price of all the homes in the U.S. right now is $428,800. That's up just 1% from last year. This is the median price of those 707,000 single-family homes that are in active inventory right now. I haven't shown this view of home prices for a while. This is the long-term view of home prices over time. The dark line is the asking price for all the homes on the market around the country. The red line is the cohort of homes newly listed in a given week. I like this view because it clearly shows those seasonal peaks and troughs in the market, and it also shows us leading indicators for future sales prices. The price of the new listings is commonly below the whole market because that's where the demand is. So the median price of the new listings this week is $389,900. That's also the median price of the newly pending home sales. So the homes going into contract are $389,900 as well. The more expensive homes sit on the market longer, so that dark line here stays higher. After the new year, we can gauge buyer demand strength by how quickly the red line jumps here. Look at 2022, right in the middle of this chart. In the first quarter of that year, everyone was buying and bidding because mortgage rates were rising or about to rise. That was the last of the pandemic boom market. It was Q1 of 22. If you're a seller in that time, you see the demand, you list your house at a little premium. When sellers list at a premium, that red line here rises quickly. So home prices, as measured by this price of the new listings, are up 4.7% over last year at this time. That's right in the range with most of the home price metrics that we've been reporting on. We expect home prices to be softer in 2025 than this year. And one of the early places to test that hypothesis will be to watch the trajectory of the bright red line here, the price of the new listings after the new year. The takeaway for home prices is that prices will finish 2024 up about 5% over last year. And that was a surprise to me given how weak home buyer demand was all year. But nonetheless, that's where we are. We are expecting home prices to rise only 3.5% in 2025. And we will watch these leading indicators here during the year to confirm that hypothesis. Price cuts have yet to notably decline for the winter. 38.9% of the homes on the market have taken a price cut from the original list price. That's 50 basis points fewer than last week, so it's down a little bit, as there's more homes absorbed each week. So we see some sales and some withdrawals. And so for the existing stock, some slightly more price cuts are happening now too. For the homes sitting on the market, if you aren't withdrawing over the holidays and you didn't sell, then some of those sellers are taking price cuts. So this is a subtle measurement, but normally you might expect 80 to 100 basis points fewer in this metric each week, this late in the year. But we only ticked out about 50 basis points recently. This is one of the leading indicators that makes it hard to imagine home prices climbing 5% or more again in 2025. Right now, at these levels of affordability, there's still a lot of sellers who aren't finding the offers they were hoping for. So the takeaway on price reductions is that you can see some price sensitivity along with mortgage rates around 7%. And after the new year, we're going to be watching for new signals about the rest of 2025. If you need to communicate about this market with buyers and sellers, you should join us at Altos Research. Go to altosresearch.com, book a free consult with our team. We'll help you dive into your local market and start helping people understand the market today. There's a link below for that. See you soon.